Okay, so chapter 1 from our book, Principles of Banking, it's called Banking and You. And in this chapter, the book kind of goes through some of the details about how banks operate, their structure, their employees, their role in the community, and some of the products and services that they offer. So we'll kind of start off and just talk a little bit about the role of bank employees. So bank employees are sort of everyone that works at the bank, starting from the person who accepts deposits and makes payments, and the tellers and the service staff, to loan officers, to the people that work behind the scenes on the technical support, the websites, the compliance, the auditing, the accounting, the board of directors, the senior management. All these folks are bank employees, and colloquially we all call them bankers. And they have a couple of really main duties, but essentially sales and service are them. The bank employee's job is essentially to grow the bank's income and balance sheet, and to service their customers in a way that helps both parties reach their goals. So customers have goals, the bank has goals. A bank employee's job is to help the bank reach its goals by helping the customers reach their goals. And the bank employees are asked to act with integrity, to act in ethical, responsible ways. And the position is a position of trust. The employees are trusted with customers' cash, with their money, with their savings, with their credit histories, with a lot of their personal information. And the customers, that is, they need to be able to trust in the integrity and responsibility of bank employees. It's one of the reasons we see bank employees sort of look dull and boring, that they tend to have a stuffy sort of reputation, because the bank wants to always project an image of security and safety when it comes to their employees and their customers' money. In the banks are structured in such a way that they have to start off with a charter, and the charter is sort of like a business license for banks. And the banks get their charter from either the state or the federal government. The federal government does more and more chartering these days with FDIC insurance and things like that, and interstate banking, as it's becoming a bigger and bigger part of the business. The federal government is chartering more and more banks, but some banks are still chartered by the local government, state governments. And you can see that with credit unions and with state banks. In Exhibit 1.4, typo there on the presentation, it's actually Exhibit 1.4 on page 8. You can see that. Okay, just pause the recording there. Went back and corrected that. 1.4, page 8. You can see a typical bank structure. Starts off with the board of directors, and then they'll have the senior management, which usually includes the chief executive officer, chief information officer, and other officers. And then it branches out as you go down the ladder to the different departments and committees. So you'll have the branch operations, loans and leases, personal banking, trusts, many other things. A lot of smaller banks will have loan committees, compensation committees, and other committees that sort of decide bank policy and what the bank is going to do with certain activities. Bank and financial holding companies are the way that certain banks are structured, so that they can engage in more activities and more financial activities through non-bank subsidiaries. That certain things that banks are not allowed to engage in, or in the case of credit unions, that they're not allowed to engage in. So one may be to issue credit cards, or insurance, or other activities like that a normal bank doesn't do, but the bank will own a subsidiary company called a bank holding company or a financial holding company that will operate in those activities and allow the bank to increase their income. So it's a peculiar way that banks have evolved over the years to accomplish more and more things. So bank products, their services, and the role of the bank. The chapter kind of goes through a good little section here about what banks typically offer. Now everybody knows, or at least they have an idea, that banks tend to offer traditional products like deposit accounts and loans. But they also offer non-traditional products, and some good examples of some of these non-traditional products are on sections 1.5 and 1.6 on page 10 and 11, where you can see other activities that the holding companies will do. And so those are worth reviewing right there. But as time goes on, some of these non-traditional products are becoming more and more important. Securities, insurance offerings, and now especially mobile and electronic banking are becoming more and more important in the day-to-day operations of banks. In my own bank, for instance, our mobile and electronic banking makes up a bulk of the interactions our customers have with the bank. Now, banks in the community, it's one thing to say that banks serve the community, but it's another thing to see exactly how it does. Now, the CRA, or Community Reinvestment Act, is a government regulation that dictates that a certain number of the bank's loans are going to have to meet the credit needs of their individual communities, and that has to include low and middle income families. It cannot just be the preferred customers that banks have. So the Community Reinvestment Act, or CRA, allows, or doesn't allow, it forces banks to do a certain amount of their business in those sectors. Banks are also tasked with customer service. I mean, the important thing to remember is that banks provide a certain service that people cannot provide for themselves individually. And so that's why they are vital in a community, or credit unions, if that's your preferred alternative. But when we say customer service in this slide and in the book, a lot of the things that we mean are to say that banks need to give customers the services that they need. So that can be things like deposit accounts, safe deposit boxes, but also loans and credit. And then in this way, in the credit function, banks serve to grow the economy. And the way that they do that is they help facilitate people making major purchases and financing things that they wouldn't be able to do at one, or that would be very difficult to do at one time. If you think about most people buying a house, let's say, your average house in Fairbanks might go for $200,000. Well, it could be awfully difficult for an individual to save up $200,000. It would take an awfully long time. So banks and credit unions and lenders in general can help to facilitate that economic growth by making money available to buy those pieces of property where they may not be able to do it with such quantity without the function of banks and credit unions. So what are the future trends in banking right now? Now, I'll just take a second here to just say, as we go through, you'll notice that I don't follow the book word for word. I just try to jump around and hit on some things that I think are important to just sort of talk about a little bit more. If there's anything throughout the course that you want to talk about more, let me know, and I can add in. These lectures are fairly easy to put together. As you can see, I'm getting a little more fancy as I get more comfortable with the programs that help make this happen. But if there's anything you want to talk about more, or want to have a special section on or something like that, just let me know. I'll be happy to do that. So future trends in banking. What's going on from now into the future? Well, increased competition is one thing. There's more banks, there's more lenders, there's more competition for customers' dollars, even on things like deposit accounts. Now there's banks and deposit services in the online sphere where you don't even have to have a building to house the money. It's all sort of kept track of electronically with banks like ING and some others. Insurance companies are also getting into the banking business. You have State Farm Bank, Allstate Bank, that want to lend money to their customers, if they're insurance customers, because it's a profitable business. Lending money is a good return on investment. If you have $5,000 to lend out and you can get 5% interest per year, that's a much higher return than you can get socking it in a savings account or just about any other investment. So it's a profitable venture. So a competition increasingly is getting more diverse. There's technological advances that are making the old ways of banking obsolete. And the first one of these was the ATM, the automatic teller machine, where you go in and you stick your card in and it spits cash out. That was the first advance that really started changing the way banks work. Now there's some banks in the lower 48, for instance, Bank of America, they have a building with no tellers. There's just machines and phones and computers, and if you have a problem for your basic transaction, you pick up the phone and you can talk to somebody in North Carolina. Most transactions can be done at a machine now, deposits included, and transfers, and all sorts of things. So the technological advances in the industry make the banking industry, it makes it necessary that we continue to think about ways that we are going to improve and strategize and try to find our niche in the marketplace. Because if we don't, we may be on the outside looking in. Geographic expansion. Some of the bigger banks have branches in almost all 50 states. Bank of America had them in 46. Wells Fargo has branches in 45 states. And they're always looking to do new geographic expansions, and puts pressure on smaller banks like mine, like Denali State Bank or Mount McKinley Bank here in the interior, to compete. And small banks need to continue to compete as well. They're going to expand. So it's a different world. And then there's new financial services that are being developed all the time, and new financial products. We heard a lot about the derivatives market, collateralized debt obligations, all sorts of things that are coming about that didn't exist 50 years ago, 100 years ago. And that's going to continue to happen. So it's going to be an interesting point of view for the future. So last slide here, and I went on long today, so I'm not going to do them this long in the future, but this is what's going on in our community. Competition with larger banks and credit unions in the interior of Alaska, and in some of the outlying communities where some of you may live. You may notice there's only one or two banks. Well, that may continue to increase the competition. The local banks and the big banks are always looking for ways to drive their economy or to drive the income in a flat economy. There's not a ton of building, not a ton of lending going on, so banks are looking for other ways to grow their systems. And then, of course, we're trying to help grow the community and grow the businesses in Fairbanks and in Alaska in general. When businesses need money, local banks try to pick up and get that ball rolling, and some of the big banks do too. So all of those things sort of work together to grow the local community, grow the economy. So that's my take on some of the important parts of Chapter 1. Stay tuned for Chapter 2. This one's going on almost 15 minutes here. I'm going to try to make this shorter next time. For those of you who stuck around, thank you. But do read the book, because I did not cover everything. Things on the quizzes, the questions for the exams, and homeworks are not all going to be covered on these slides. So make sure to check out what else is going on in the book. Email me any questions you may have, or in the forums you can always start a chat, and I will try to stay on top of it. Until next time, we'll talk to you soon.